Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, Cactus Jack, Dude Love over here. The Dividend Diplomats. We're talking to you today about a dividend stock that always gets mentioned in the comment section when people talk about what stocks they've been buying and what they're watching. So you know what, Lanny? Today we're going to look at BlackRock to see if it is an undervalued dividend stock to buy.
Man, before we dive into BlackRock, guys, turn that subscription button on, ring that bell, like this video, show some love for the DD, guys. We're putting together another dividend stock analysis video because that stock market is dropping. Bad inflation news. The CPI index continues to rise. The Fed's going to increase rates another 75 basis points at a minimum next week, guys. Stock market dropped over 4% today, September 13th. It's time to see if the rock is black and the black is rock.
That's right. Also, we're forgetting the biggest news of the week, Lanny. Browns won. Browns.
Oh man, Victory Monday, Victory Week.
Victory Monday at the foot of Cade York himself. Saved us from having to hear Baker Mayfield quotes all week long. That said, that's why you're here. But that's not why you're here. We're here to look at a stock that is high on everybody's mind. That is one of the largest asset management firms out there, to see if it should have a spot in our portfolios and your portfolio.
You're down about 30% year to date. I could see why you want to look at the stock, Bert. It's got an above average dividend yield. It's got a lot of solid dividend stock metrics. And I know we'll pit BlackRock against T.Rowe Price, the dividend aristocrat who is on their way to being a dividend king in 15 more years. So we'll start really looking at BlackRock and how they match up to the other dividend growth stock that the dividend investing community loves to buy and own and hold in those dividend stock portfolios. T.Rowe Price, baby. We all know, we all have at least a share in our portfolios.
Before we do that, though, we're going to jump into BlackRock's earnings release. We're going to talk about their assets under management, all that good stuff, just to see what we are missing. So let's start here. BlackRock. How large are they? 8.5 trillion assets under management as of June 30th. You know, just if you go to our website, you know, look at our portfolios, it's pretty similar size to BlackRock there. Isn't that right, Lanny?
Someday, Bert, someday. And you're right. I mean, they had a pretty solid, decent Q2 given the state of the economy right now. As you know, obviously, most of their fees is generated off of the size of assets under management. But the key piece, I think, is one of the first big bullet points they talked about, Bert. And what was that?
Yeah, it was that despite the fact that assets under management decreased to 8.5 trillion, they still saw 90 billion of cash in total net inflows during the year. So I think that's the key piece. Obviously, at the value of assets under management is going to decrease when the stock market decreases. We know what happened to the S&P 500 during the second quarter. So it's already expected that assets under management are dropping down from levels. But that's the key piece, Lanny. People are still putting more money into BlackRock. The cash is coming in to keep buying more assets so that they're not losing assets under management and people aren't running from the hills from their platform. That would be the situation you want to avoid from these asset management firms.
Right. Now, I know, they had a little bit of a revenue impact here, obviously, with lower AUM, 6% decrease in revenue year over year. And I know that they're trying to offset that, though, with technology service revenue, aren't they?
Yeah, so I think that's an interesting piece of this as well, is they're getting a different type of revenue, offering that tech as a subscription, getting more fees off of that. So they're not so dependent on the assets under management and the fees that come and are tied to the value of the market.
Yeah, BlackRock has been offering a product called Aladdin, which is an electronic or technological advanced, I think, portfolio management software, right, Bert?
Yep, that's right. And hopefully they're going to be delivering a genie in a bottle for your portfolio. All right. But I think another key piece there, operating income's down year over year. EPS was down. Again, it was expected given everything that's going on. I think the other funny part is they highlight that during the quarter, they still purchased $500 million worth of shares. So at BlackRock's current share price, they repurchased 10 shares of BlackRock. Kidding, everyone. It's just funny because their stock price is insanely high, as you're going to see when we go into the Diplomats dividend stock screener here in a moment.
Yeah. I mean, $500 million worth of shares buying back, obviously is going to help, quite a few things. Obviously, the earnings per share, dividend payout ratio, you name it, et cetera, et cetera. But, again, BlackRock, let's see if the dividend stock metrics, which we focus on three: price to earnings ratio, the dividend payout ratio, dividend growth, and we'll look at dividend yield here for you guys. But we'll really see how they stack up and compare not just BlackRock's metrics to the screener for BlackRock, and we'll give a high level of what it compares to T.Rowe Price, which is ticker symbol TROW as well.
So, all right, everybody, let's jump in. That first metrics, the price to earnings ratio. Remember, the S&P 500 has been in the high teens, low 20s this year. It's come down from what we saw, the insane levels of 25x last year at its highest point. So that's the benchmark for comparing BlackRock to the S&P 500. Currently, BlackRock stock price is $644.91, led by forward analyst earnings estimates of $33.64. Gives you a PE ratio of 19.17x. So they're in line with the market. You can't really say they're undervalued compared to the market because it's right around where it's at today.
And to give you a frame of reference, T.Rowe Price's current price to earnings ratio is about 14. So a little higher on the valuation to T.Rowe Price.
So now let's go to the dividend. Just to keep going with the metrics. Again, remember, this metric, we look for payout ratio less than 60%. We do think that perfect payout ratio is 40 to 60%. BlackRock pays an annual dividend of $19.52. Is their dividend more than the current share price of AT&T, Lanny?
You're damn right it is, brother.
All right, so your dividend from BlackRock can buy you each quarter, can buy you, if you own one share of AT&T.
Bro, you've been buying AT&T stock over there, you dog?
Yeah, you know me. Whoops, running for the hills on that one. All right, we're coming back here. All right, payout ratio, $19.52 dividend for BlackRock. Divide that by 33.60. That's a perfect payout ratio of 58.03%.
Almost at the ceiling there of the 60%, Bird. We'll see how they stack up. They might be a little bit even higher than that if earnings continues to decline, if assets under management continues to decline. Obviously, it's still a safe payout ratio, still has room to grow, room to pay, but it's definitely gone up this year, no doubt about that. To go into dividend growth, though, they've been doing, the dividend growth streak now for 12 plus years, guys, and they're crushing inflation. I know inflation is a hot topic right now. Fears of recession is back on the table. Inflation is hot and heavy still, but their average 5-year growth rate is 14% for BlackRock. So that's nothing to scoff at there.
Right, that is nothing to scoff at here, Lanny. So when we compare that to T.Rowe Price, let's run through a few of those metrics here. T.Rowe also has a perfect payout ratio of 57%. So they're about the same exact reason you applied for BlackRock. You can say the same about T.Rowe Price. And T.Rowe Price, where they shine compared to BlackRock, is that dividend growth history. T.Rowe has increased that dividend for 35 plus consecutive years. They are on their way to becoming a dividend king. And their 5-year average dividend growth rate is 23.66%. So they're beating BlackRock on the 5-year dividend growth rate, and they're beating them on the history of increasing their dividend.
Just beating them down, aren't they? They're just lining it up, stomping a mold hole in them at the turnbuckle right now. They're saying, what? Everybody's just going to town on BlackRock and T.Rowe Price.
Yeah, so now let's look at that bonus metric, the dividend yield, to see how the two stack up against there. The S&P 500's yield is in the mid 1%. BlackRock's current dividend yield is 3.03% compared to T.Rowe Price. Lower. T.Rowe's current yield is 4.13%.
T.Rowe Price, obviously is beating BlackRock across the board on all metrics. They're also down 10% more than BlackRock this year at 40%. And they're obviously smaller as well, about a fifth of what T.Rowe Price is. or of what BlackRock
Yeah,
is.
they're just a little smaller.
Just
But
a little, still over $1 trillion in assets.
yeah, I mean, that should really tell you about the scale of just how large BlackRock is. They were over $10 trillion at one point in 2022 at the peak of the market.
Now, Bert, I know you own a lot of shares of T.Rowe Price. I
Mhm.
do as well. I think we were buying at these T.Rowe prices, T.Rowe prices
Yeah.
earlier this year on the 115 to 120 mark. Do you see any room in your own portfolio for BlackRock right now?
I mean, look, it's a fantastic dividend growth stock. I don't think you can complain. They have a strong history, very strong earnings. They're one of the largest. They're battling. I saw one headline that said they're trying to take on Vanguard in the coveted ETF space. So BlackRock has the scale to do what they want to in the sector, to take on who they want to and try to continue growing earnings. That said, our goal is to buy undervalued dividend growth stocks. Plain and simple. We look for value in the market, and it's hard to say right now, I'm going to buy BlackRock over a company like T.Rowe when BlackRock's not on, they're fairly valued with the market, and they're probably a little undervalued compared to their historical mark, but they're still not a discount, especially when you have a great company like T.Rowe that's just sitting there as a screaming undervalued with a yield of 4% plus.
Yeah. I mean, obviously, two great companies. BlackRock is a great stock. They definitely have more investments than T.Rowe. They are very competitive in the ETF space between Vanguard, Schwab, Fidelity, kind of what you think of your top ETF providers. I know even one of my family members' accounts, they just flipped to BlackRock investments instead of Vanguard investments as their option within their 401k plan at work. But those things change, quite often. And actually at my work, we just switched our stuff to Fidelity. So again, it changes often. Obviously, there's a lot of competition in the retirement space as well. And BlackRock having the dominant iShares ETF portfolios, nothing to look away from. And it's a great company.
Yeah, look, it's not right for me at this moment, but I'm just one investor. If you came in, you write in the comment section below, I like BlackRock, I prefer them, I get it. I would say go for it and continue adding. They're down year to date. By all means, the metrics.
Is this a Coke versus Pepsi here?
We'll see. We'll see. But I mean, again, just not right for me at this time. But that's why we do this.
Well, if you own BlackRock, why do you choose BlackRock over T.Rowe and vice versa?
Yeah, I mean, we're going to leave you with that question, everybody. So answer that question below. Let us know why you're picking BlackRock over that dividend aristocrat. Love to hear it. If you haven't already, what do we still need to do? Subscribe to this channel. Yeah, smash the heck out of it. Give this video a thumbs up. Everybody, let's go. Let's keep buying those income producing assets.
That was Bert, the Hurt Locker, and Lanny from the Dividend Diplomats. Over and out.